G'day everyone, my name is Greg Canavan, back with you for another update, and this week I want to talk about the Aussie housing market. Normally when I speak to you each week we always talk about the markets in general, stock market, what it's doing. This week I've got a bunch of stocks that I want to hone in on and give some sort of indication of where we are in the housing cycle right now. It's obviously making the headlines a lot. House prices are quite weak in Sydney and Melbourne, and following on from that around the rest of the country. The housing or the building construction sector is down quite a bit as well. So I've got a few charts here that we'll run through to give you an idea of, hopefully an idea of where we are in the cycle and whether there's any investment opportunities that are coming from the falls in the prices. First thing I want to do is highlight with the chart you've got here on the screen now, before I actually get into the detail of the companies, is that the two lines that I talk about, I haven't pointed this out too much. The two lines on the chart there, the red and blue lines, are the 50-day and the 100-day exponential moving averages, and you'll notice that I put those on all the charts that you see here in these updates. Effectively, this is more or less a medium-term trend indicator. So moving averages just smooth out the daily volatility of share prices, and by smoothing that volatility out, gives you a better indication of the underlying trend. I choose 50 and 100-day moving averages because it's more of a medium-term trend. It's not really a short-term trading trend that I look for. It's really a medium-term trend to sort of give me an indication of where the share prices are going and what that trend is. So looking at the chart here, we've got brickworks. I wanted to put a couple of building materials suppliers up first to give you an idea of where we are in that cycle. By the look of this chart, this company's done quite well. The downturn in housing construction hasn't really hit this too hard, but as you can see with the blue, which is the 50-day moving average, starting to come back down towards the 100-day moving average, indicates that the trend is now in the process of turning down. And as you can see, the share price, which is the black line obviously, has made it's quite volatile there over the past, towards the end of 2018 and into 2019, starting to make new lows if you block out the really sharp fall in November. And often that's an indication of a big change in trend. And my bet would be that you're going to see lower share prices for brickworks in 2019 with that trend turning over there. Next chart, I want to show you with a company, CSR, building product supplier, derives around about 50% of its revenues from building materials. This share price, as you can see, is off quite sharply. The moving averages turned down in mid-2018, and there's really no end in sight of the downturn. We have had a bit of a rebound in the share price since December, which matches really what the broader market's done, so there's no surprises there. But one thing I often look at when I'm looking to see whether there's an opportunity to buy a stock that's fallen quite heavily like CSR is to look at those moving averages and see whether they're in the process of turning back up. So in this case, you'd want to see the blue line starting to turn back above the red line, so the 50-day moving average turning up above the 100-day moving average. As you can see in CSR stock, that's not looking at all likely at the moment. So more than likely, this is just a bounce, a bit of a bounce in a long-term downtrend. This could be the bottom. It's too early to tell just yet. So on the balance of probabilities, I'd be staying away from this and waiting to see more evidence that we do have a low that's in. And to do that, I'd want to see the share price working its way higher, and you obviously see that reflected in moving averages that are starting to turn up as well. But as I said, we're nowhere near that yet with CSR. Next chart, just to give you a bit of an idea of, I guess, the internals of the building cycle. This is REA Group. They make a lot of kitchen and bathroom appliances. So obviously, as the construction cycle progresses, houses and apartments get built, and then you have to put things in the kitchens and the bathrooms, and this is where this company comes into play. If you look at the share price there, it's come off quite a bit in 2018, but not drastically. And if you go back and have a look at this over the past couple of years, it's still sitting above longer term support. So it's not really saying anything too drastic happening here in the industry, but certainly, wouldn't be buying it at these levels. Down at support, a short term, I guess, trading mentality would be you might buy it at support, set a stop just below those support levels, and that way, if it does continue to rise from support levels, you could get a bit of a trading rally. But for longer term investors, I'd be steering clear of this until you see a bit more evidence once again from the moving averages turning back to the upside. Next bunch of charts I've got are the property developers, starting with Stockland Group. This one has been falling consistently for a couple of years now. Stockland makes a lot of its money from developing residential land packages, and as you can see from this chart, it's in a pretty consistent downtrend, continually breaking down to new lows, the share price, and really the moving averages just can't maintain themselves in an upward trend. So not a good picture of the residential construction cycle from Stockland. Once again, we could be close to a low here, but it's really too early to tell. So you'd be just rolling the dice on trying to bet for the lows at this point. Backing that up, Lendlease Group, another big property developer. It had a profit warning out late last year, and that's where you can see the share price falling sharply there. That actually didn't have anything to do with its residential property development arm. It was more of its engineering division. But even so, the residential slowdown cycle is starting to kick in for Lendlease's earnings on that part of the business, which is why the share price is down so heavily, and it's still struggling. Moving averages, once again, give you no indication that this is anywhere near a buy at this stage. Next stop, continuing with the developers, Sunland Group. Very sharp share price falls from the highs around August. That corresponded with the high of the general market. And I think it was last week I showed you some of the moves in, for example, the consumer discretionary sector moved very sharply down from August through to the lows in December. That's replicated here with Sunland Group, and that tells you that really the economy slowed very sharply into the latter half of the year. Things were looking okay up until then, but all of a sudden, whether it's building approvals, consumption by households, all those things have slowed down very sharply, and this share price is telling you exactly that. The rebound's been quite sharp, but as I pointed out in last week's update, sharp rebounds after very sharp falls often not a great sign in terms of buying opportunities, because they tend to run out of puff, and you'll see some more selling come through there shortly. It's a similar story with Villa World, which is another property developer, although this one peaked in early or late 2017, early 2018, and it's been trending steadily downward since then. No end in sight to that downtrend. Still wouldn't be buying it at this stage. Moving on to, I guess, more the financial side of things, Mortgage Choice. This is a broker. The banks pay brokers to introduce business to them, and Mortgage Choice has been going down for pretty much all of 2018, which tells you the mortgage brokers are probably getting squeezed on the margins from the banks, and also reflects just the lack of demand, lack of credit coming from banks, and lack of demand for new loans from consumers, and especially, or from households, sorry. So especially when you see house prices falling, obviously people take a step back. They want to see how much those house prices will fall before stepping in and applying for loans. And you're seeing that in the share price of Mortgage Choice here, which, like many of the others, hit new lows in December, although in this case the bounce has been quite weak, and not much of a bounce at all really. So I'll be steering well clear of this one as well. Finally, in the group of stocks that I've got to show you that the housing market, REA Group, which is realestate.com, this is really a volume play. This company does well. The more that advertising goes up to advertise new housing and apartments and those sorts of things, and when turnover slows down, this is when this company will get affected. So it's not bothered too much by the rising or the falling house prices. It's more about the turnover of the market. Once again, this stock peaked in around August, September, and it's fallen pretty sharply since then. It has fallen down to support, so it's not looking too drastic for REA Group at this point, but it'd be a good idea just to keep your eye on support there and see whether it can hold or whether it breaks down to new lows. But look, all in all, for the housing market, there's really no indications that we're near a bottom. As I said, we could be, but you want to see a lot more evidence that prices are starting to stabilize, the housing construction cycle starting to stabilise. Maybe it's going to take the Reserve Bank to come in and cut interest rates to provide a bit more support there. But until you see any of those signs, it's not worth wading in and trying to pick the bottom of these markets, because you don't know whether the bottom's going to fall out again and we have another 10, 15, 20% downturn in share prices. So I'll be steering clear of this sector until we get more evidence that the bottom's in. And when that happens, I'll be sure to let you know. All right, good on you. Thanks for listening, and I'll catch you again next week. Be sure to click on the link below to subscribe for more market updates.